I am staring at the filing and I still don't believe the zeros. $250 billion for xAI.
The ultimate left pocket, right pocket maneuver. Elon using his rocket company to buy his AI company.
Oh, come on. He doesn't own all of SpaceX. This is a bailout for xAI investors disguised as aerospace integration.
Try arms race, but fine. If you want a real private equity handoff, look at KKR today.
Selling liquid cooling tech for almost $5 billion and buying cupcakes for $2 billion.
Nothing Bundt Cakes Maya. Respect the frosting before we run the valuation math. The rundown. So KKR is basically playing Monopoly with itself today.
Selling a liquid cooling company for almost $5 billion and turning around to buy a cake franchise for $2 billion is certainly a flex.
It's the ultimate sponsor-to-sponsor shuffle. Roark Capital hands Nothing Bundt Cakes to KKR. KKR hands CoolIT to Ecolab. Private equity is feeling the heat from LPs to send some cash back, so we're just watching them pass the parcel across the table.
Okay, but look at the Ecolab deal, $4.75 billion for CoolIT. Ecolab is traditionally a water and hygiene company.
Right, so why are they buying server cooling tech? It feels like a stretch.
Because data centers are literally boiling. Everyone wants a piece of the AI infrastructure boom. You dig into the footnotes on their last earnings. Ecolab has been telegraphing a move into data center water management for months. It's a massive premium, but I actually love the strategic fit.
I just love that KKR cashed out of high-tech server cooling to buy literal Bundt cakes. $2 billion for frosting. The pitch deck for that must have been delicious.
Hey, margins on sugar are historically very stable. Roark did exactly what they do best, scale a franchise and flip it.
Speaking of stable, Merit Medical is scooping up Viewpoint Medical for $140 million.
Nice little bolt-on. Expands their oncology imaging portfolio. Standard operating procedure, no drama there.
And Hitachi Rail grabbed Clever Devices. I guess we're optimizing digital railways now.
The industrial and mid-market deals are humming. Over 80% of dealmakers are telling pollsters they expect higher volumes and aggregate values this year compared to 2025.
Which brings me to the Deloitte note. They're calling 2026 a quote throttle up moment for bank M&A. Super regional consolidation is finally happening.
Oh, come on. We've been hearing about the great super regional bank roll-up for 3 years. It's a ghost story bankers tell each other to feel better about their empty pipelines.
This time, the regulatory ceiling is actually lifting. Easing regulatory uncertainty is real. Timelines for pending mega merger approvals are visibly shortening across the board.
I'll believe it when I see an actual term sheet, not a Deloitte survey. Show me the filings, Nate.
You're so hopelessly cynical.
I prefer data-driven. Speaking of data and mega mergers and AI infrastructure all colliding at once.
Oh, we're going there.
$250 billion.
Elon is consolidating the empire.
SpaceX, eating xAI, is going to break the valuation models. I want to know exactly how Sullivan and Cromwell papered this monster. The big one.
$250 billion. I just need to say the number out loud to make sure I am not hallucinating.
You are not hallucinating, but you are looking at the ultimate left pocket to right pocket transaction. SpaceX acquiring xAI for $250 billion is historic, sure. It is also Elon buying from Elon.
True, but look at the strategic rationale. You have SpaceX, which is essentially a massive logistics company for the solar system, needing infinite compute to model atmospheric reentry, optimize Starlink routing, and who knows what else. Putting xAI's infrastructure directly inside the rocket company makes perfect sense.
Does it make $250 billion of sense? Because I read the press release, and Sullivan and Cromwell must have built an absolute fortune figuring out how to structure this without triggering a massive governance crisis. You are merging two private cap tables with heavily overlapping investors.
Oh, the fairness opinion on this one belongs in a museum. But you cannot ignore the AI arms race. Everyone is locking up compute. If SpaceX does not own its AI layer, they are vulnerable. Look at the broader market, Maya. Over 80% of sponsors are projecting higher deal volumes this year. The cash is there. The urgency is there.
I am not arguing the urgency. I am arguing the price tag. $250 billion is a paper valuation designed to make xAI look like an equal peer to OpenAI. It is a pure narrative play. They are not transferring $250 billion in actual cash. It is an all-stock consolidation.
You are way too cynical on this.
I am exactly the right amount of cynical.
No, hear me out. If Starship actually colonizes Mars, the AI brain running that colony is easily worth $250 billion. It is a long-term play. You have to value it like a banker looking at a 50-year discounted cash flow model.
A 50-year DCF for a Mars colony. Nate, listen to yourself. You are out of your mind.
Okay, maybe 50 years is a stretch. Even I know I sound like a desperate pitch book right now, but the aerospace integration is real today.
Meanwhile, back on Earth, the private equity guys are just trying to hit their quarterly distributions.
Which brings us to the funniest contrast of the week. KKR is playing both sides of the table today. They just sold CoolIT, a liquid cooling company, to Ecolab for $4.75 billion. Highly strategic, very AI adjacent.
Right, data centers run incredibly hot. Liquid cooling is essential infrastructure right now. Great exit.
Exactly. And what is KKR doing with that cash? They are turning around and handing $2 billion to Roark Capital to buy Nothing Bundt Cakes.
Wait, really? $2 billion for cupcakes?
Bundt Cakes, Maya. Respect the brand, but yes, $2 billion.
That is amazing. You sell the literal cooling system for the AI revolution, and you hedge it with frosting.
It is the ultimate barbell strategy, high tech and high carbs. But it actually proves the point about LPs demanding liquidity. Sponsors are handing aging portfolio companies back and forth just to generate some realized returns.
Well, if regulatory easing continues to shorten these approval timelines, we are going to see a lot more of these sponsor-to-sponsor handoffs. And not just in private equity. Deloitte is already calling next year a throttle-up moment for bank M&A.
Speaking of banks swallowing each other whole, we need to talk about what these shifting timelines mean for the super regionals. Voices, 80%. That is the number of private equity and corporate sponsors who told analysts they expect higher deal volumes this year. Deloitte is literally calling it a throttle-up moment for M&A.
Throttle up! I love when consultants use Top Gun metaphors to describe guys in fleece vests trading assets.
Hey, we wore the fleece with pride. But seriously, the optimism is deafening right now.
It is not optimism, Nate. It is sheer panic. Oh, look at the data. LPs are screaming for liquidity on these aging portfolios. This is not a throttle up. It is a massive game of sponsor-to-sponsor hot potato.
Oh, come on, you do not drop $2 billion on Bundt Cakes out of panic.
You do if you are KKR and you need to deploy capital while simultaneously cashing out elsewhere to appease your investors. They are playing both sides of the table today.
Right, buying Nothing Bundt Cakes from Roark Capital for $2 billion, which is a phenomenal valuation for frosting, by the way. But they are also offloading CoolIT to Ecolab for $4.75 billion.
Exactly. Selling liquid cooling tech to buy baked goods. Peak late-stage capitalism.
A balanced diet. Tech infrastructure on the left, carbs on the right. But you have to admit, seeing a nearly $5 billion exit for CoolIT proves the market can handle big tickets again. Ecolab is a strategic buyer, not just another sponsor.
I will give you Ecolab. That is a real strategic move. But those Deloitte analysts predicting an acceleration in super regional bank consolidation, I need to see the regulatory approvals actually clear before I buy that narrative.
Funny you mention regulatory approvals. Easing uncertainty in Washington is exactly why tomorrow is going to be wild, especially for TMT and banking. Plus, we need to talk about the massive gravity well Elon just created. You do not just drop $250 billion on an AI startup and not cause a tidal wave. Spill the tea. You can practically hear the limited partners screaming for cash right now. It's getting loud out there.
We'll look at the survey data. 80% of PE sponsors claim they're bullish on deal volume this year compared to 2025. But I read that as pure desperation. They have to be bullish. They're sitting on all these aging portfolio companies and the clock is ticking.
Exactly, which is why we're seeing the ultimate game of sponsor to sponsor hot potato. My favorite example today is KKR. They're literally playing both sides of the table in the span of 24 hours.
Oh, the Ecolab deal.
Yes, KKR is dumping CoolIT to Ecolab for $4.75 billion. But they take that cash, turn right around, and hand $2 billion to Roark Capital to take Nothing Bundt Cakes off their hands.
I cannot get over this. They sell a highly strategic liquid cooling company and buy a bakery chain. From another PE firm, $2 billion for Bundt Cakes.
Hey, don't knock the bunt. Roark built a massive footprint there. Cash flow is cash flow, Maya. People eat cake in a recession.
I'm not knocking the cake, Nate. I'm knocking the multiple. $2 billion? For a strip mall bakery? This is exactly what happens when LPs demand liquidity and firms just start trading assets with each other to show movement. It's corporate musical chairs.
I think you're underestimating the retail strategy. Roark scaled it perfectly. KKR just needs to optimize the franchise model. It's a classic playbook.
A classic playbook for generating fees, maybe. I dug into the CoolIT footnotes. KKR made a killing there because cooling tech is actually critical infrastructure right now. Selling that to Ecolab makes strategic sense. Buying a pastry chain to park $2 billion feels like they just needed to deploy capital fast.
Fine, I'll concede the cooling tech is the better long-term play, especially with what's happening in the data center space.
Which brings us to the actual critical infrastructure deal of the century. Because while KKR is buying frosting, Elon Musk just dropped $250 billion to consolidate his AI empire. Tomorrow's radar.
Tomorrow, I am watching KKR. They just sold CoolIT to Ecolab for $4.75 billion and then turned right around and dropped $2 billion on Nothing Bundt Cakes.
From liquid server cooling to cream cheese frosting, quite the strategic pivot.
It is a classic sponsor-to-sponsor handoff. Roark cashes out, KKR buys a bakery. 80% of PE sponsors claim they are bullish on deal volume right now.
Bullish or desperate? You call it a handoff, I call it hot potato. LPs are screaming for liquidity because these portfolio companies are aging out.
Oh, come on. $2 billion for a cake franchise is not a hot potato. It is a sugar rush.
I will believe the optimism when I see actual public exits, not just private equity passing the parcel.
Fair. Also, watch the banking sector tomorrow. Deloitte is calling 2026 a throttle-up moment for super regional consolidation.
Throttle up. I love consultant speak.
They get paid by the syllable, Maya. We will see if the regulators actually let them merge next time.